The tariffs announced by Trump pose a big challenge to European firms, which will have to face prospect of lower exports to the US, but also a major shock to other trading partners, which are similarly affected or maybe even more affected by the tariffs than the European Union. This raises uncertainty from already high levels, which is bad for confidence, capex plans, and employment. The good news is that interest rate cuts by the ECB will continue, and fiscal policy in Germany is set to become very expansionary. Moreover, rising real incomes should support private consumption in the euro area. Dramatic changes in the geopolitical landscape require a response both at the European level and at the individual company level. Europe should speed up its agenda to strengthen domestic investment, raise productivity, and enhance the single market, which is a unique asset only us in Europe have. This would allow Europe to navigate a more challenging external environment. Companies should invest more in research and development, raise the value added of their production, and search for alternative markets. To do so effectively, critical mass is important, as larger firms can better achieve economies of scale. In Europe, difficult times have often proved to be opportunities to make important progress. I think and hope this time will not be different.